Welcome back for another report on the gold market. Gold prices dropped sharply on Monday and relented the sideways motion of the past days as the USD strengthened while stock markets had a marked sell-off. The USD reached the highest point since the 12th of August against a basket of other currencies as widespread worries for the resurgence of COVID-19 tended to increase safe haven flows for the USD. It was characteristic that the greenback gained momentum as the US stock market sold off due to the COVID-19 worries, scandals in the banking sector that rocked the equity markets, and increased doubts over the possibility of a fiscal stimulus being approved. It should be noted that the death of former Supreme Court Justice Ginsburg and the race for her replacement added another twist in the US elections. The haste with which US President Donald Trump acted to fill the seat tended to increase the distance between the two parties for a possible compromise for a fiscal stimulus. The rivalry of the two candidates ahead of the US presidential elections seems to intensify as both Joe Biden as well as Donald Trump hardened their rhetoric against each other, leaving little room for political maneuvers at the US Congress. However, the need for more fiscal stimulus seems to be still present, as Fed policymakers have underscored in their comments. Any headlines implying that the two parties are nearing a possible deal could weaken gold prices, as a substantial risk factor is reduced and vice versa. Yet the markets are expected to shift their attention to Fed Chair Powell testimonies at the US Congress today and tomorrow. Given the document released by the Fed ahead of the speech, the Fed chair is expected to show optimism about the US economic recovery as economic activity has picked up, yet at the same time warned that there may be a long and uncertain road ahead. However, a lot about the market's reaction may depend on the questions and answers part of the event, hence uncertainty is still rather high. Overall though, should the market be excited by the prospects of the US economy, it would provide some support for the US dollar and thus cause gold prices to suffer another drop. Should the tone of the whole event be substantially dovish though, underscoring the risks ahead, we could see gold prices gaining. Also, in a more long-term view regarding the Fed's monetary policy, we note that market expectations of rates remaining near zero could entice traders to invest in gold, possibly pushing the price of the precious metal higher. However, we would like to move away from the US and also highlight the resurgence of COVID-19 in Europe. The situation has taken a substantial turn to the worst, with the UK considering new lockdowns. UK's PM Johnson has encouraged Britons to work from home, while UK pubs, restaurants and bars will have to close at 10 p.m. Moving to continental Europe, Spain and France seem to be the new epicenter of COVID-19, as the second wave seems to be hitting. The two countries seem to have recorded thousands of new cases over the weekend, according to media, as the noise for the global market grows louder. The uncertainty seems to increase, and should the situation get out of hand, with the threat of renewed wide-scale lockdowns being present, we could see gold getting some support as the risks involved for the recovery of the European economies are high. On the other hand, the possibility of a vaccine being released could weaken gold prices as the development could reduce risks substantially. Yet the possibility of an efficient, mass-produced, safe vaccine seems to be remote, and the headlines implying that testing by various possible producers has hit a halt do not exactly boost confidence. Overall, we tend to view the situation as still critical and expect that gold prices could have substantial volatility ahead, as the uncertainty in the markets is high and complex. Issues such as the course of the pandemic, the uncertainty of the US political stage, the US-China relationships, as well as the recovery of economies could affect gold's prices in the long run. For the next week, we already mentioned Powell's testimonies today and tomorrow, and would also note the release of the weekly US initial jobless claims figure on Thursday and the US durable goods orders growth rates for August on Friday. Moving now to the technical analysis and gold's 4-hour chart. Gold's prices dropped yesterday as the USD strengthened, breaking the 1950 support line, now turned to resistance and continued lower to test the 1900 support level. We maintain a bearish outlook for the precious metals prices at the current stage. Please note that the RSI indicator below our 4-hour chart is below the reading of 30, confirming the dominance of the bears, yet at the same time may be implying that the precious metals short position may be somewhat overcrowded. Should the bears maintain control over the gold's prices, we could see it breaking the 1900 support line, aiming for the 1845 support level, while even lower we have noted the 1795 support level. Should the bulls take over, we could see the precious metal aiming, if not breaking, the 1950 resistance line, which tended to be the middle point of gold's sideways motion in the past days. Should R1 be broken, we could see gold's prices aiming for the 2000 round number, while even higher we noted the 2050 resistance level. That should sum it up for the report. From all of us here at IronFX, best wishes for solid trading.